UiPath stock is up following their strong earnings update. We're going to talk about those earnings as well as my thoughts on Path's current valuation. Where does UiPath stock go from here? If this is your first time tuning in, my name is Daniel, and you're watching Unrivaled Investing, a no-hype, mission-focused channel trying to find you exceptional companies and unrivaled investments. Let's dive right in. Where the super quick recap for UiPath is that they are the leader in the fledgling robotic process automation industry that uses machine vision to help employees at companies automate manual processes. And they talk about billions of hours spent daily on manual tasks that are now avoided because of their software. And so they posted a very strong quarter, looking at around $1 billion in annualized recurring revenue, around 50% ARR growth rate. This is very, very strong. Does suggest that they're taking market share, continuing to grow their customer base, over 10,000 customers, significant number that spends over $100,000 annualized on a recurring revenue perspective, and 138% dollar net retention rate. So even if they didn't gain any new customers, their business would have still grown by 38%, which is really impressive. They also call out that, that 138% figure would actually be even better if you factor out Russia, because that did impact their business. But they also call out another key metric, dollar-based gross retention. So just saying, hey, not even factoring in the customers that spent more, let's just look at the existing cohort, not even giving credit to their future growth. Their dollar-based gross retention rate was 98%. So effectively, if their existing customers at the end of the year didn't even expand, just looking at what they had, they retained effectively 98% on a revenue perspective, which is very strong. Now, it hasn't always been a great ride. Investors looking at this say, wow, this stock has gotten crushed. There's certainly been problems with it. You've seen management turnover. You saw lower guidance. There have been challenges. Now, they did recently hire a new co-chief executive officer. He's very early on in his days, but they are making the right steps, I'd argue. And they are looking at really strong growth with their number of customers. So their value proposition is clearly resonating from their total customer base to the C-suite, to the very large customers that are spending over $1 million a year on their different solutions. So this does suggest that what they're doing is winning. They are taking share, and that is a key metric that I want to see with every company I look at is, are you taking share? Does that mean you have an unrivaled value proposition? They call out a specific example. A global financial services and insurance company chose to standardize on our entire platform while phasing out a competitor, once again suggesting, we are taking share, we're winning. They also talk about how we consistently hear from customers that our end-to-end platform focus on innovation and vision for the future of automation are important differentiators for UiPath and key to winning in the market. In the recent Forrester RPA Inquiry Spotlight, they call out how they effectively are called out 2.7 times more than the next vendor. So this does suggest, yes, they are the leader in this fledgling space of robotic processing automation, and that they, if they're able to keep growing the industry, that there's just tremendous potential from here. They also put out very reasonable guidance. Effectively, the growth rate isn't crazy. You're talking around 30% growth rate. But what is interesting is them saying, in the next quarter, we're expecting this non-GAAP loss of 60 to 55 million. But for the year, using the same measure, we actually expect to be $10 to $15 million profitable. So they do expect sort of to have this inflection point later this year in terms of their profitability as the business continues to grow. And they do expect to cross the $1 billion annualized recurring revenue point in the coming quarters. So that is good to see. The question is, where does UiPath stock go from here? And so first, a quick plug where if you're looking to take charge of your investment journey, consider unrivaledinvesting.com, where you'll get weekly actionable insights on unrivaled companies. We also have a community of fellow investors that you can learn and share with. I also share my own personal journey for those interested in following along. A big thank you to all the Unrivaled Investing subscribers that keep this channel going. Without the Unrivaled Investing subscribers, this channel would not exist. So a big thank you to all those that are Unrivaled Investing subscribers. If Unrivaled Investing is not within your budget, I do appreciate you hitting that thumbs up, hit that subscribe button as well. So let's keep going. Also, in full disclosure, once again, I do own stock in UiPath. You can read the rest of the disclaimer on your own time. So taking sort of a top level perspective before we actually look at the nitty gritty of UiPath's valuation, first of all, I did a whole video effectively saying, yeah, all these great investors, they're warning you about the macro environment. This includes unprofitable companies like UiPath, where I think there's a lot of pressure that these companies are facing. I'm going to do a whole nother video on what Ray Dalio is effectively warning investors, because stocks are in a really tricky position from a macro perspective. And so a lot of folks sort of have this mantra of like, oh, just dollar cost average, and I'm just going to keep buying and buying and buying. But there's a real possibility that you're looking at a lost decade for stocks that could be really problematic, where, that bottom valuation that you think, just keeps going lower. And I think companies like UiPath could be in that sort of crosshairs of continuing to come under pressure. So I did a whole prior video on that. I'll do another one sort of explaining why Ray Dalio thinks stocks are trash shortly. But looking at UiPath, it is worth calling out that it is not truly unrivaled. It does have a lot of competitors, which does make me a bit nervous. I mean, Microsoft is one of the top players competing with them. So is Automation Anywhere. I believe that's a private player. But, when I think about Microsoft, they have this huge advantage. Previously you had Slack saying, oh yeah, we welcome the competition from Microsoft. But Microsoft said, okay, thanks for inviting us into the space, and we're going to roll out our Microsoft Teams as a free solution to all these, office customers, and we're going to crush you. And ultimately, Slack was effectively forced to sell themselves to Salesforce. So when I think about that dynamic, I consider, okay, UiPath probably, in my opinion, will get acquired at some point to sort of compete with the very strong competitive advantage that Microsoft has, which is saying, hey, we have this full suite of solutions. Maybe it's not as great of an automation solution as, let's say, UiPath, but every year we're going to get a little bit better. But maybe you get it at a discount because it's part of a full suite of tools. And so that is something that UiPath is going to be struggling with, I suspect, at some point. So far, though, their results suggest that they're rocking out and they are crushing the competition. That's what the data suggests about them taking share and still growing at 50%, even despite some of the pressures that they called out in previous quarters. I even did prior videos on. So that is, just data points where I want to keep tracking each quarter. Is Microsoft, or all these competitors actually encroaching on their turf? Are they still the visionary leader that's going to continue winning the RPA space? Also, when you look at UiPath, it is worth understanding that this is really, it is a significantly unprofitable company right now. So this year is a big year to prove out what they're, could they actually get to non-GAAP operating profitability later on this year, maybe profitability and greater profitability next year, really free cash flow. This has around $200 million in gross profit, over 80% gross margin, but they're taking nearly all their gross profit dollars and investing it in sales and marketing. Once again, when you're competing against the likes of someone like Microsoft, maybe you have to spend a lot, almost all of your gross profit dollars on sales and marketing. That's the challenge. Can you actually scale that up over time? And so that's part of the tricky part. So we'll see if they're going to be able to balance out getting profitability here, which is currently, effectively cash burn, and get to, manage having a lower sales and marketing expense, or maybe they just keep it flat while the business, the top line, continues to grow. And that is a challenge for them. So thinking about the valuation from here, this is a hypothetical framework. Of course, stock price can go way higher, way lower. After seeing how much the stock has sort of bombed out over the last year, I'm looking at the current valuation thinking, maybe if they execute, if they deliver, if they, let's say, grow annualized recurring revenue 35% this next year, and they continue growing, let's say, for the subsequent 4 years at around 25%, assuming a 25 times end multiple for their earnings, assuming a 35% margin, wide range of margin possibilities. They have over 80% gross margins. What is it at scale? That gets to that big question. That's why I'm using a wide range of 25 to 35%, slap on a 15% tax rate. So looking at this, a 20 to 25 times earnings multiple, I'm effectively saying, yeah, the stock is potentially flat over the next 5 years to over 100% upside. And that, once again, this is the upside potential if they execute. If they can do even better than 25%, if they can do, let's say, even better than a 25 times multiple 5 years from now, if they can do better than 35% operating margins, then you could pencil out a better return. But I'm looking at this saying, yeah, they do have some tough competition, and let's see what their growth rate is in the years ahead. If they're closer to 30%, 40% over the next 5 years, I would expect the stock to do much better. So I do own a teaser position in UiPath just because I like the potential. I like the direction that they're heading in. They're clearly, the strongest player. They're taking share. They are the visionary in the space. So that's what I like to see. The question is, how long can this hyper growth endure? And, could I get it at arguably a cheaper price? And that's what I want to look for. Or, I call out to Unrivaled investing subscribers, companies with the full range of possibilities from the hyper growth to deep value. And so this is, I'd argue, this is in the hyper growth territory, getting closer to a reasonable valuation. It's still, it's trading at effectively 8 times forward annualized recurring revenue. That is not dirt cheap yet. You could have, as I'm warning investors about the macro, that there's still this huge macro headwind, you could have a lot of these unprofitable companies that haven't yet proven their margins get to really, really low multiples, especially if you get like a double whammy of a recession. So if this video has been helpful for you, please make a point of hitting that thumbs up and hit that subscribe button. Thank you so much for tuning in.